Let us see our next question. United States dollar 10,000 is lying idle in your bank account. You are able to get this. You are able to get the following quotes from your dealers. Dealer A, Dealer B, Dealer C. We have been provided with the quotations of the euro, dollar, euro, pound, sorry, dollar, pound, like that. So these are the rates which are there. The question says that is there any arbitrage gain from these quotes? That is the question. So over here we understand that we have been provided with the information like this: A, B, and C. The exchange rate is given to us as 1.1539 dollar per euro. Then 0.9094 Great Britain pound per euro. Then 52 US dollar per pound. That is the way we have been provided with the information say about the exchange rates at the three different places, three different dealers. The question says that say if at all you have $10,000, can you make any arbitrage from the given information? That is a question. I want you to tell me answer of the question first. Now friends, over here, first of all I need to decide that whether arbitrage is existing or not. I need to draw a conclusion that say whether arbitrage is existing or not. Suppose for that I am taking the dollar per euro exchange rate common and say I'll make the computation of the dollar per euro exchange rate using the B and C dealer, because you can see that the pound currency can be taken common. That exchange rate which I compute, that I will compare with this, and based on that say I will take a decision. Based on that I will be able to draw a conclusion that arbitrage is existing or not. So over here, keeping exchange rate dollar per euro constant. Let us say that I am doing answer. So what will happen over here? A and B and C. That is the way I'll mention. In A it is 1.1539. It is dollar per euro. For B and C, I need to compute. What I want dollar per euro. So the final answer is in dollar term. It is per euro. Against euro, which currency is given? Against euro, pound currency is given. Against pound, which currency is given? Dollar currency. Dear students, I hope that all of you are clear that I am taking the B and C dealer into account. Okay, so now what will happen, friends? I want dollar per pound. Dollar per pound itself is the rate which is given to us. So 1.2752 into I want pound per euro. Okay, the same itself is given 0.9094. So there is no need to make any reciprocal value. Into 1, that does not make any sense. 1.2752 into 0.9094. So 1.1597. 1.1597. Both of them are not same, so arbitrage exists. This is what we understand. So now first of all we have drawn a conclusion that arbitrage is existing. Once you reach to this conclusion, then let us have understanding that say how to make the arbitrage calculation. arbitrage calculation can be made in this way. You have to see that, say, as far as the euro currency is concerned, where euro currency is, say, available at a cheaper rate, is it A or combination of B and C? Sir, it is A. Okay. Then you do one thing. Let's say from A dealer you purchase euro. So from A dealer you purchase euro. And for purchasing euro you are required to sell United States dollar. So sell dollar, purchase euro. Okay. Once you have euro with you, so what you have to do? You have to go to the B dealer for conversion of euro into pound. Then you have to go to the C dealer for conversion of pound into dollar. That is the way, say, you have to enter into these three transactions. Okay. And definitely you will make a gain only. The amount is provided to us in example as $10,000. So you sell $10,000. In A you have been provided with the information as 1.1539 dollar per euro. So 10,000 divided by 1.1539. So you will get 8,666.26. This is the amount of the euro that you will get. So it is 10,000 divided by 1.1539. Okay. So now whatever the amount of the euro that you have, that you will convert into pound. So 8,666.26 euro will be converted into pound currency. That is at B dealer. So for every 1 euro you will get this amount of pound. So 0.9094 into 8,666.26. So you will get 7,881.0968. 0968. This is the amount of the pound that you will get. 8,666.26 into 0.9094. Okay. Next is 7,881.0968 pound. For that you will get dollar. So 7,881.0968 into the exchange rate is 1.2752. 1.2752. So the answer is 7,881.0968 into 1.2752. 10,049.97, or we can say that's 10,050. So ultimately there is an arbitrage of $50. This is the way, so you will end up with the arbitrage. That an answer? So this is the way you can make the calculation of the cross currency, and then logically you will calculate the arbitrage. In that, so selecting this combination of the transaction is very important. Calculation is not so important. However, the combination of the transactions that you have to take is very important. Now friends, instead of taking A common, suppose somebody is taking C common. Then in that case, how he or she will do answer, I am explaining that to you. So there is an alternative method. I request all of you to write down answer along with me, keeping dollar per pound constant. That is the way we are understanding. Okay. So A and B. Please write down answer along with me. $1.1539 per euro and 0.9094 pound per euro. So now we understand that say we want to make it comparable with dollar per pound. So final answer is dollar. Answer is required per pound. Against pound euro is given. Against euro dollar is given. I want dollar per euro. The same is given to us in the example. So it is 1.1539. I want euro per pound. However, pound per euro is given. So I need to make it a reciprocal. Into 1. In order to get the answer, 1.1539 divided by 0.9094, it comes to 1.2689 dollar per pound. Okay. So now we understand that say taking A and B together, it is 1.2689 dollar per pound, and this is A and B. In comparison to that, C is 1.2752 dollar per pound. Again, both of them do not match, so arbitrage exists. This is what we understand. Now friends, once we have drawn a conclusion that arbitrage is existing, now we have to decide that say from where to, that is how we can make the arbitrage transactions. Now we have to think logically like this, that as far as the pound currency is concerned, it is cheaper over here and it is expensive over here. So what I have to do, taking A and B into account, I have to convert dollar into pound. And in C, I have to convert pound into dollar. So what I will do, as far as A is concerned, it is conversion of the dollar into euro. B is concerned, it is conversion of the euro into pound. C is concerned, it is conversion of the pound into dollar. This is what the combination of the transactions will give me gain. Now once we identify these transactions, then you can see that ultimately the answer is going to be like this only. Answer is not going to be different. The presentation of the remaining answer will be like this only, and it is not going to be different. So taking any currency into account, ultimately it will result into arbitrage only.